In early September 2020, Chinese media was filled with some bizarre news. Evergrande, the country's largest property developer, had announced a 30% discount of all properties, a 1-month limited offer. To the average homebuyer, having grinded and saved for years, this was a miracle, and so the cash flowed. And this was exactly what the too-big-to-fail construction behemoth, at the time $120 billion in debt, needed to stay afloat. Later that month, a letter was leaked, allegedly from Evergrande, addressed to the local government of Guangdong, proposing that if certain backdoor deals and stock market listings don't materialize, the company could default under its own debt, leading to widespread, systematic financial risk. 1 year later, and the crisis has only grown larger. The firm, now more than $300 billion in debt, is likely to go bust by the end of this week. The fear amongst its creditors, some millions of average Chinese citizens, has caused widespread protests across the country, a pretty rare occurrence in one of the most authoritarian countries on the planet. The company's stock is down some 85% since the beginning of this year, and global markets are on the brink of a crash, worried that a default of this size could lead to a global financial crisis like the one in 2008. But is their fear justified? Will Evergrande actually become the second Lehman Brothers, whose bankruptcy triggered the Great Recession? How did we even get here? How much trouble is China really in? And why is China's real estate industry so important to the global economy? Evergrande is larger than life. It holds some 2,000 domestic and 200 offshore subsidiaries and controls some 1,300 development projects across 280 cities. It directly employs over 100,000 people and generates an estimated 3 million jobs. Its assets, exceeding some 2 billion yuan, are equivalent to 2% of China's GDP. Since the company's founding in 1996, its growth has been explosive and it's quite literally changed the face of China. But over the years, Evergrande has become a bit too comfortable with its position in the Chinese economy and has started to make some unfocused and dodgy investments with some oddballs like buying an electric car company and a football club. All this while being completely dependent on taking more debt in order to generate liquidity and continue growing. It's not tough to argue that Evergrande is too big to fail. The company holds some $300 billion of debt, $200 billion of which belongs to average Chinese citizens who've pre-ordered over 1.5 million apartments that they may never receive. Besides millions of customers and its bondholders, the company also owes money to some 171 domestic banks and 121 financial firms. Up until just a few weeks ago, most investors weren't that worried. While still huge, they argued that Evergrande's debt only makes some 1% of Chinese bank loans, and so if it implodes, it won't melt down the whole system. But markets are pretty worried now, especially following the official news that Evergrande could default on its own debt as early as September 23rd, but likely by the time this video is out. It's also becoming clear that Evergrande and its fellow enormous property developers are only the tip of the iceberg. To understand why, we need to have a look at China's real estate market and how the recent regulations by the CCP have brought these companies to the verge of collapse. China was built on the back of construction. It makes up some 25% of the economy, and the nation's economic growth is now more reliant on it than ever before. The rise in real estate prices, especially in major cities, has been exponential. The insatiable demand makes it so that despite the extremely low construction quality, think communist blocks, the price will always increase as long as there is more families reaching excess income and pre-ordering property year on year. Construction is a driver of employment. More construction means more riches for an area, which means more demand for real estate, which means more construction, and you can see how this can snowball really quickly. And as speculative as the market is, it all somehow works. There aren't that many great investment options for the average Chinese family, and real estate has a lot going for it. Just like the American dream, the Chinese dream makes it so that owning property brings you social status and a certain level of financial independence. Even more crucially, you and even your children will be registered as urban citizens instead of rural laborers in the complex hukou system. An oddly unequal system of social organization for a communist country that divides society between urban and rural citizens. This determines what type of social services that you will receive and, more importantly, where you can receive them. So to put it simply, if you want to make it in China, your best bet is to live as lean as possible while you're young, take on a bunch of debt, pre-order an apartment from a company like Evergrande, and wait for the price to go up. And it's worked for millions of families. Real estate now makes up 75% of all household wealth in China. But there's a problem, because property now also by far makes up the largest amount of household debt in the country, equivalent to some 70% of its GDP. This amount of bad corporate and household debt has put China's economy in quite a pickle. You see, the Chinese state needs this property boom to continue, since 30% of local government revenue comes from leasing land to property developers like, you guessed it, Evergrande. It's also their favorite tool to revamp the economy in a downturn like, you guessed it, the COVID-19 lockdowns. On the other hand, all of this has made the Chinese economy quite fragile. The debt crisis, now some 220% of China's GDP, could cascade into something more horrific than the 2008 financial crisis. And having tens of millions of people lose all of their savings and investments at once could lead to widespread social unrest, the CCP's darkest of nightmares. If Xi doesn't control this situation, it could destroy years of economic progress in a matter of months and hurt the Communist Party's legitimacy. So the CCP has been trying to dig its way out through some new regulations called the 3 Red Lines. Through these regulations, developers are limited to a debt-to-asset ratio of no more than 70%, a net gearing ratio of less than 1%, and a cash-to-short-term debt ratio of at least 1. The more of these red lines you cross, the less debt you can add in a given year. And here, my friends, is where Evergrande and its fellow developers who have crossed all of these 3 lines are in trouble. Adding more debt has been their way of generating liquidity and growing their company for years, and now they can't take any more debt to keep the party going. This is the source of all the chaos in global markets. Years of sloppy business management mixed with sudden and harsh regulations from the central government has put trillions of dollars at stake and the threat of a global financial crisis. So what exactly will be the ramification of Evergrande's defaulting in the coming days? It's probably too late for the Communist Party to go back on its current regulations. Bailing out Evergrande will only continue a sick and broken system, while letting it die will send a message to the entire Chinese financial system that too much risk will not be tolerated. Any miscalculations on this path, though, could cascade into thousands of defaults, the destruction of the construction industry, and even economic collapse. It's not just Evergrande that's dying, but also Huarong, a financial conglomerate, and Cynic Holdings, whose stock sank 90% in one day on September 20th. The most likely scenario is that either Evergrande or one of its fellow troubled institutions will be nationalized. In the short term, that's a win for the CCP. Crushing protests is no big task, while gobbling up massive shares in developers only strengthens the party. Most of Evergrande's millions of customers will probably not lose their homes and even see them built someday, given that most of these contracts have already been delegated to public or private contractors. But Evergrande's massive investments have so far spearheaded the exponential rise in property prices, and its collapse will likely cause the market to also nosedive. And a stagnant property market will only lead to more developers defaulting. This might be a win for Xi Jinping in the short term. He has promised to curb China's growing inequality. Some 75% of that inequality comes from property ownership. The bigger threat, though, is that lower property prices will make the average Chinese consumer much poorer, which will have global consequences and will slow down economic growth within China. The even larger risk is to China's banking system, which has lent billions of dollars to the likes of Evergrande and could see it all evaporate within the coming days. All of this could be a sign that Xi Jinping's aggressive economic campaigns are actually taking China towards an uncertain and even dark future. The crash of Evergrande will, in the short term, sink financial markets. But only time will tell how big and deep the ramifications will actually be for the Chinese and global economy. And oh boy, will it be an interesting story to follow. If you enjoyed this video, please subscribe for a follow-up to this story and more, and support this project on Patreon to help finance more high-quality videos like this one. See you next time.